Good morning, it's the 13th of April. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Jamie and Steve this morning. How are we doing, gentlemen?
Oh, good, thank you.
Yeah, very well, thanks.
Nicely timed there, Steve.
Yeah, a few technical issues, but I'm there.
Superb. Okay, let's get stuck into the latest headlines. A fair amount going on over the last 24 hours. Let's just quickly summarise that, and then we can dive into some charts and have a look at what we expect from the day ahead. So latest headlines, there were some hopes for the US inflation number peaking. According to the data, the consumer prices increased 1.2% for March, which is in line with the consensus forecast. The year-on-year inflation rate increased sharply to 8.5% from 7.9%, which was slightly above the market expectations of 8.4% and is the highest rate since the end of 1981. Energy prices surged 11% on the month with an annual increase of 32%, while fuel oil increased 70% on the year and food prices increased 1% on the month. There was some optimism, however, that the rates were close to peaking. We saw the US yields correct lower yesterday. US Treasuries a little changed after the New York Open on Tuesday and then rallied following the US prices data. They closed around 2.75% on Wednesday. Further hawkish rhetoric has continued from Fed governors. Brainard stated that the reduction in the balance sheet could come as soon as June after a decision is made in May. Richmond Fed President states that the rates should move rapidly to neutral and then tighten further if needed, while the St. Louis head Bullard insisted that rates would have to increase above neutral. In terms of what's going on with Ukraine, there have been further negative developments there, and that has continued to hurt the euro. Very strong expectations that there'll be a major Russian offensive on the Donbass within the next few weeks at the latest. The Russian president stated that peace talks with Ukraine were at a dead end, while the German industry stated that gas stocks would last until summer if Russian supplies were cut off. So there continues to be more fears over a prolonged conflict, and that has sapped support for the euro. This morning, we've had the latest numbers from the UK on the inflation side of things. That's at a fresh 30-year high at 7% for March from a previous of 6.2%. And that was above the consensus forecast of 6.7%. Markets' reaction has been so far quite muted, given that most central banks are facing the same inflation problems and the tightening of monetary policy looks set to continue. We've got the Bank of Canada today. They've got interest rates decision at 3 p.m. UK time, and they are expected to hike rates by 0.5%, which will put them at 1%, following the hawkish rhetoric from the bank at the last meetings. So that's it for the headlines. Let's now get stuck into some charts. Steve, you're right to kick us off today?
Yeah, sure, absolutely. Going to take a look at Bitcoin, obviously very popular with a lot of our viewers. We have got a negative looking formation on the weekly chart, and this is we've seen some follow through this week so far. So negative price action. We're trading around $40,000, so a nice round number. This is the daily chart. We're in a channel. We do have support around about the 36,000 level, which I do expect that we will actually test at some point. However, we have seen some a sort of like a stalling in this sell-off. This is the hourly chart. We've seen a nice stall. So, and there's potential here for a little bit of a turnaround. We've got this bottom here and the bottom here. If we do get a break of the neckline, which will be the peak in between these two bottoms at 40,700, let's say, then this will form a double bottom, and that will have a measured move, projected measured move target of, let me measure it live on air right now, of a move back down up to 42,250. However, in the last hour, we've seen a little bit of a ominous looking candle. This is a bearish engulfing candle, potentially a bearish outside candle. I can't, it's quite close to it. It's pretty negative though. So, you know, if we don't recapture ground above 40,280, then this double bottom potential may be retested. So looking for that breakout, 39,250, 40,700. A break either way, we should get some form of extension from there. Looking at commodities, obviously oil is expected, has had a bit of an uplift, and obviously you can see that Russia-Ukraine impacting on the price of oil, and we've seen this trend higher over the last 2 days, really. I think I tried to fade this yesterday and obviously got caught on that. However, looking at the hourly chart, again, nice little head and shoulders formation potentially forming, but it's only on a short-term chart. This could be negated very quickly. This is a left shoulder, neckline, head, right shoulder, or the neckline, and that looks quite nice. A break below the support here at 99.46, and that could open up the downside. However, it's very short term. So and the measured move target of that would be a move, you can measure it, head down to the neckline and extend that lower, would be a move towards $98. So yeah, looking at the real minute sort of like numbers on, I mean, the volatility in oil at the moment is way above what we've seen for a long time. On the gold side of things, also pretty interesting levels. We've broken up above resistance now. This was the resistance, 1966, England World Cup winning year, but we haven't been able to close above it over. Although we've traded through it over the last couple of days and today, so 3 days we've been through it, we haven't actually been able to close above it yet. So a close above here for me, and maybe we have to sort of factor in the 1975 resistance as well. This was the peak on 24th of February, and yeah, a close above there would take out the 1978 high that was posted yesterday, and that would be quite constructive, and also that would confirm a double bottom on this formation after this sell-off down. So yeah, potential on the gold side of things, that seems to be factoring in also the Russia-Ukraine situation. Obviously that threat to the Donbass region is being taken seriously by the commodities. So yeah, feels like further upside, and the volatility will accompany that.
Okay, let's take a look at the FX markets then first up. So dollar index still continues to move to the upside, breaking through resistance yesterday at 100.28. If it closes in the green today, then that will be 10 consecutive sessions of upward movement, which is seldom seen. But yeah, looking pretty strong indeed. The next move or level I've got above the current price is up at 101.40, which is an 88.6% Fibonacci retracement of this entire move here. So looking very strong indeed, and not a lot slowing it down as things stand. So obviously that is having a knock-on effect on many other currencies. Aussie, as we can see, that's pulled back from these highs that we posted quite recently, get up to highs of 76.57, but pull back towards this support area here. Little bit of indecision. I mean, Aussie looks probably not bad compared to some of the other currencies that I'm just about to show you. We look at euro US dollar, that's probing new lows now, trying to take out this low that we posted on the 7th of March. That's at 108.25, and we are edging ever closer to that level. If we get below that, then we're looking for a pullback to this kind of region, which is at 106.40-ish, which we have to go some way back to the start of the pandemic to see when that was previously at that level. So looks to be pretty bearish there. And on the flip side of what we've just looked at in the dollar index, 10 consecutive red candles there on euro US dollar. Take a look at cable. Situation isn't much better. That's taking out now this support at 13000. Big psychological round number. Also the previous lows that we posted on the 14th of March, slicing through that number today, and look to be heading down towards this 50% fib level at 128.45. So no sign of let up on that at the moment. Obviously, the weakness is not being helped by the inflation print that we saw today, which came in above expectations. If we take a look at New Zealand dollar versus the US dollar, that's been trading in, if we look at the longer term, a bearish channel by the looks of things, and in the more shorter term, certainly from the start at the end of January, we've been trading in this kind of corrective channel higher. What we're seeing now on the daily chart is a break below that, and what looks to be a bearish outside candle as well, engulfing all of yesterday's gains, while simultaneously breaking through this channel. So it looks as though lower prices may be seen on this as well. I was sort of looking at the idea of this being an inverse head and shoulders, but I think we can safely say that's kind of failed now and looks to be heading to the downside. Let's have a quick look at indices then. I'm going to start with the FTSE just because it's obviously our domestic market, and we've had these inflation numbers today. So we've seen this failure into this 76.87 level, posting of a bearish engulfing candle on the 11th of April. We backed that up with further losses yesterday. We've tried to have a little bit of a look higher today, but we are well off of the best levels of the session already. Still clinging on to some green. Obviously, we've only been open 12 minutes or so now officially. But it looks as though that is a little bit under pressure, and we could see lower prices materialize throughout the trading session on the indices. If we take a look at DAX, that is flat on the session, tried to have a little bit of a move to the upside, but still looks as though it's under pressure. I've got support down here at 13,385, which is a 61.8% fib level. I'm sure there's a 50% a bit higher. Yes, there is 13,679, so that may provide some support as well. Overall, I'm still looking for lower prices on that. Nasdaq outperforming so far today, up by 0.5%. But if we look at yesterday's price action, we can see that it had a really decent move to the upside, trying to engulf all of the losses that it made on the previous session from the 11th of April, but couldn't hold on to that and actually closed in the red yesterday, very close to the 61.8% fib level at 13,832. So again, looks as though it's under pressure. We may find some support around here today, but again, I think it looks as though the indices are set to remain under pressure and lower prices are likely. The Dow Jones, finally, again, similar sort of situation, tried to move to the upside. I was talking about the idea of this being a head and shoulders top on the intraday chart. I got stopped out because I was a little bit aggressive with my stop on that yesterday. So it didn't work out for me, but still potential for that to work out. I think unless it invalidates this right shoulder, then there is still the probability or possibility that this is actually a head and shoulders and we may see lower prices. So still one to watch for me. That's it on the indices. What you got on stocks, Jamie?
Cool. Yeah. Thank you, Joe. I think just to round off what you're saying, this is the S&P had a much cleaner head and shoulders play out. Have I shared my screen? Let me see if I can pull this up. I thought I had, but maybe. I do apologize. Give me 1 second. Yeah, the S&P had the same kind of head and shoulders formation that you were talking about on the Dow, but it was less choppy around that breakout zone. And as you can see, we actually managed to catch this yesterday. The price came and retested this previous support level, and it reacted to it quite nicely. Whereas, as you were saying on the Dow, it came up and it just kind of chopped around. So, and that was kind of the story of the day for the. Let me just pull up the stocks. It was quite choppy, but prices did end up closing lower, with the biggest loser on the day being AMC. And I swear we talk about AMC each time being the biggest loser, but you can see now it had this really big impulsive move up, but now it's struggling. It broke straight back through this what would have been a support level, and I think this coincided with the 61.8% Fibonacci retracement. We're now down to the 78.6. If we don't get some kind of buyers come back into the market here, it's going to probably come all the way down to this previous support level of $14. But what's interesting to me about this, and I guess the real danger with this type of stock, is from the low of this move, and we'll take it from 12.92 to the high. It was a 165% move in best part of 2 weeks. which is just crazy. But then the inverse of that is the move we've had down from the high. So we'll take it from 34.40 and to where price was yesterday, we're down 50%. So you really get your ups and downs with stocks like AMC and GameStop and whatnot. But that's why it's so important to have some kind of risk management, kind of know where you get out of trades if they don't go your way. Because otherwise you can get really, really hurt quite quickly. The biggest winner of yesterday, and there wasn't many from the stocks I looked at, but Apple didn't lose the most, I guess is the best way of looking at it. We had this it was a bit of a doji style candle. It didn't quite close at the same point it opened. It was still down from where it did open, but it gapped up. So that's why it was up 1.15% on the day. Not much going on with Apple. It's just quite choppy at the moment, honestly. I think the key levels to watch are, I'll draw them out now. I know price did get a little bit lower than this, but this is a support kind of area you'd want to see buyers come back in if you're bullish on Apple. And then equally, I think the kind of highs is kind of around here. When I draw my support and resistance, I never draw like one particular price. It's more an area, a bit of a zone. And this is kind of where you see the majority of sellers are looking to get short. So they're the biggest winners and losers today. We'll quickly jump into a couple. I think we looked at AMD yesterday and how it gapped through what was the support and now is the resistance. I'm not really sure what's going on here because we had a bit of a gap up. You can see price actually open. I'll zoom in to make it a bit clearer at this 98.80 level, we'll call it. And it closed much lower than it opened at 95.17. So we've got this bearish outside day. And that follows a run of now 1, 2, 3, 4, 5, 6, 7, 8, 9 out of the previous 10 days closed lower than it opened. So not looking so hot on AMD. I think lower prices are probably to come. There possibly some consolidation before, but I think we could really start opening up this kind of $80, $85 level. Let's look at
it does look concerning. That AMD.
It's looking ominous, that, isn't it? I think we had another one which I think is looking. Yeah, we've got Disney here, which we're kind of in the earlier stages of a descending triangle formation, and I think I looked at a stock like this before. It might have been Nike, where we had this big sell-off. We had this big gap lower on earnings back in November. We tried to rally, but again failed, and we had another 2 gaps lower. I'm sure if we pull out the volume, we'll be able to see. I hadn't even looked. You can see the red days, the bearish days, are the ones with the highest volume. And we're at a key support level, which has been tested twice already. It's about 129. A break of this, and you can see I've kind of got it set up. I'm looking for a break of this level to possibly get short and see a continuation of this this bearish move, really. And the kind of next level, I think, if it does break, will be this is a weekly chart now, will be this previous, trying to draw it. It's not perfect. This kind of 118.50, thereabouts. I think that's the next real point where buyers will come in force, but not looking great for Disney. Let's finish. What should we finish? I'd highlighted Neo just because quite an interesting. I know we actually identified this last week, but you can see the follow through from it. We had this bearish outside day, and I remember when we did look at this last week, we were actually talking about potential inverse head and shoulders, where we had this resistance level here, gapped through and closed higher. But I think the writing was on the wall for Neo here when we had this bearish outside day, because this is a really negative formation. It engulfed the whole of the previous day's gains. It closed below the level of what would have been support at that point, but now is resistance again. And since then, we have had that move extended lower, and we can see that in percentage terms where we got all the way down to 20% lower, which is, it's huge moves. It doesn't look so big on a chart like this. It looks like a couple of small dots, but 20% is a lot. And then we're at about 13% lower from that now. So again, things not looking so good for Neo. On a weekly chart, we've got a lot of room to drop down here still. We've got a gap open from July of 2020. And from I don't know if this was actually the IPO, but this is the data that we've got from TradingView. This is the I guess, the kind of next key level. Obviously, there's that previous support, not really support, but the previous swing low, which you'd hope some buyers would come back in. But I think also 10 being a psychological level as well. I think that's probably the next key target if prices keep moving lower on Neo. But yeah, it's not looking so good either. But yeah, we'll call it a day on the stocks there.
Cool, thanks Jamie. So let's rattle through to the gun to the head challenge next. So each day on the video we call a live trade. We give you a stop and a target, and we place these ideas at market. The trade ideas will expire at 9 p.m. UK time, or when the stop or the target is reached, and we keep track of the performance throughout this process. So yesterday we had not such a great day. We had shorts on Dow, oil and copper. All three sadly were stopped out following the bumper day that we had the day before. So back down to earth with a bit of a bump. Obviously, by using the approach that we do, by risking 1% per trade on these ideas, it means that we've used pretty good risk management. So all in all, we are still nicely ahead over the course of the 2 days. It's all all about holding on to your gains and not giving them back when you have bad days, which inevitably will come. So let's dust ourselves down and get back involved again today. Anybody got something ready for us?
Yes.
Go on then, Steve.
Yeah, go for Steve.
You were mentioning FTSE, Joe, and the main thing about FTSE, it has a very large dollar component, and the dollar's doing really well. Now, indices, I love selling indices, and I'm very tempted to sell all the indices all the time, every day of the year. But that wouldn't really do very well overall. But FTSE is the only one that really I fancy. This inverse head and shoulders formation, really, I would, in an ideal world, wait for a break of 7,600 and then get long. But it is a gun to head challenge. I am going to get long here at this level here. The measured move target for this, we measure the head to the neckline, extend it up. So that's where we're heading, or that's where the measured move target is. The stop really ideally would be below there. That's too much. So I've got to have a little bit of a more aggressive stop. That gives me a 3.7 to 1 risk reward. So that's getting long at the current level, 75.83, targeting a move to 76.55, we'll call it, and the stop at 75.63. So it's only a 20 tick stop. It's not very far away at all. Could be stopped by the time you finish doing your ideas, but that's it.
Let's have up then. Jamie, what you got?
I'm actually looking to short cable this morning, and I think it's one you highlighted of making these significant lows that we haven't seen for a couple of years, and it's kind of broken out of this short-term consolidatory channel. I'd ideally look for a retest of this level, but got a gun to our head, so we're going to short where we're at now, which I've got at 129.80. The measured move for this kind of a channel is just to take the distance from support to resistance and extrapolate it out, so it gets us to about, it's kind of roughly done, but we're about down here. So this is a 2.33 risk reward. I will publish the idea and you can see all the details in a moment.
Cool, thanks Jamie. Yeah, so all these ideas are being published onto our TradingView account if you want to check them out. I'm still tempted to stick with my idea from yesterday, which is the Dow. I still think there's maybe the chance that this is a head and shoulders playing out. I know that sort of goes against what Steve said on the FTSE, but I just think that the indices are likely to remain under pressure. And if this does break, then the risk reward is pretty decent. The measured move of this head and shoulders is down at 32.984. So just looking at the hourly chart to try and finesse the entry a bit, I'm going to sell it at current prices, which is at 34.382. Stop loss is pretty tight, really, 34.505, above the highs that we've posted over the last hour or so. And I'm going to target the measured move number, which is, I'm going to go at 32.990, which is 11.4 R.
Go for it, Joe.
That's a chunky move.
Absolutely ridiculous. Well done.
It is ridiculous. Let's have a see what happens.
I can really appreciate that.
So I'll publish that up on TradingView now, as will the other guys, and you'll be able to track that. Someone has asked about the sharing of the Excel document in the description. I will update this on the Google Sheet and add it on so people can have a look at what we've done so far and dissect those trades if they want. All these ideas have been called live on our videos previously, all of which are on YouTube. So obviously feel free to check those out. There's quite a significant amount of content there. Okay, so moving on to the day ahead then. We've got the US producer prices at 1:30 today. We then have at 3 o'clock the Bank of Canada policy decision. And then overnight UK time, 2:30 UK time tomorrow, we've got the Australian employment report. And then tomorrow, a fairly big deal, we've got the ECB policy meeting, and they're going to be under a bit of pressure to maybe address the inflation concerns. They have been the laggard, I suppose, in terms of acting upon inflation and tightening monetary policy. So maybe we'll see a shift in the rhetoric there. That's it from us. Unless you guys have got anything else to finish on.
No, all good.
Yeah,
lovely. Perfect. Well, have a great day, everybody. Thanks for watching, and we'll be back tomorrow morning.
Cheers.
Thank you.
Take care. Bye-bye.